welcome back to Markets Today. If you're just joining us, we are on site at the Stanbic Bank head office speaking to the Chief Finance Officer, Mr. Abraham Ongenge. This interview is on the back of the first quarter 2020 numbers that were released by the bank. We are here to get an understanding of what has COVID meant for the bank's operations. What has the bank done in terms of mitigating factors that it has been able to pass on to its client base? What does this mean for you as a shareholder? And what next once we get over the COVID, as Mr. Abraham calls it, pandemic, and get into the endemic stage of this issue that we are facing currently? Welcome back, Abraham.
Thank you.
We've gone through the revenue breakdown and you've given us a very good understanding of that. We've also gone through the balance sheet. I had one or two more questions in as far as looking at the balance sheet is concerned. I did notice some growth in the deposits due from the other due from other banks. Can you walk us through that and maybe give us a sense of what is happening in the interbank market? Is liquidity becoming a challenge in that space? Is Stanbic Bank okay? Is Stanbic Bank lending to other banks through the interbank channel?
I do think we still have adequate liquidity in the market. I think as an opportunity, we've grown our deposits quite well. As a bank, we do have ability to access foreign currency type deposits, and in a market like this, we then provide an opportunity to share with other banks foreign currency should they require. So our deposits, largely on the deposits due from other banks, grew as a result of some element of deposit raising from our group entities, and that then was disseminated into the lending space, and partly because of short-term liquidity opportunities placed with other banks.
Okay, fair enough. And what's the split today in terms of foreign currency and local currency in your deposits?
About 55% of our customer deposit book is in local currency, and about 45% is in foreign currency.
And what is the split on the loans?
About of course, about 58% of our book is in local currency, and then 42% is in foreign currency.
Okay. And then when we're talking about liquidity and the Kenyan economy, the conversation or the risks out there when we speak to investors are surrounding government operations. Fiscal deficit is becoming a concern. There has been talks from the Retirement Benefits Authority and Treasury with proposals of possibly deferring government interest payments because of lack of liquidity in government operations. How does that border for your operations, especially given the fact that you do invest in government securities? What does that mean?
I think it's important for the market to understand that in this period of COVID, one way of ensuring that the economy rebounds is for us to actually actively spend. And it is actually spending with some level of accountability, and hence elements such as the stimulus package are actually quite critical because it encourages some level of spending. I do think that there is still opportunity for the government to look at better ways to raise revenue and alternative ways without necessarily showing a little bit of stress to the Kenyan public. So I'm not necessarily worried about the government's ability to continue to service its obligations. I think the confidence that is being brought by looking at some of the Bretton Woods institutions willing to assist the economy does help in creating confidence around the ability of Kenya to rebound in this situation.
Okay. And then looking at opportunities to keep lending to the government, do you see a situation where the government will keep coming in either for short-term paper like 5-year paper, what we saw last week, infrastructure bonds? Could this be something that we continue to see from the government in terms of tapping into domestic liquidity?
Yeah, and we also do have to appreciate that from a sourcing perspective, the government has actually adequate funding received already. So I do suspect that they will be responsible in their efforts to tap to the market.
Okay. And then circling back into the capital structure of Stanbic Bank, maybe you can walk us through the ratios and whether COVID-19 has the possibility of causing a review of your dividend payout policy.
Yeah, I think globally the uncertainties COVID will cause are still unknown, and there are various simulations happening every day to kind of think about the impact of COVID-19. We did propose through the holding company a dividend payment in the year 2019. We are looking at modalities to allow us to present that proposal for consideration to our shareholders. And should the shareholders determine that as favorable, we would continue and pay dividend. I do think going forward, if you look at the year 2020, the uncertainties remain. So it does require us to review the adequacy of dividend payments in the year 2020. We will definitely remain responsible in ensuring that we have the right balance between capital to enable us grow and support Kenya, as well as available funds to then take back to the shareholder.
I was about to ask you for guidance, but after COVID, China is not giving guidance. I don't expect any guidance, any guidance from you. But maybe you can give me a sense of are there any other triggers that are going to keep you up at night? Are there any stress factors that you're looking out for to see how they pan out, looking at Kenya as an economy and as a head of finance in a banking institution in Kenya?
Yeah, it is important that we reflect that COVID is one issue that we are grappling with as an economy. But we have two major issues. We have the locust invasion, which I think with new swamps, we may have a little bit of strain. We also do have the remnant effects of floods across the country, which we do need to deal with. The COVID pandemic has created a new normal, but it has also created its own risks. One big risk is the risk of cyber, which is quite critical in the banking sector because we are mostly digital right now. So that keeps me awake. I also do think the dissemination of the stimulus package and the accountability of it is quite critical. And the governance in ensuring that this goes to the right people and it's effected correctly is also something we need to be.
I don't know if it's something to pray about. I'm not too sure how to counter that. I'm in total agreement with you in terms of accountability and governance. And I guess our only hope is that the people in authority will actually bear that burden and do what is expected of them and required of them really by law. Yeah,
it is encouraging to see that the government is actually utilizing all skills and all efforts across the divide. So that kind of gives some sense of hope that there's some level of realization that accountability is important.
Okay. I think we're coming to the tail end of this conversation. Now that we are operating in a new normal and we are working to adjust, and Stanbic Bank has been very vocal and also instrumental in terms of supporting its client base. What do you see as a way of continuing sustainable support for the SME sector, for your banking clients, as you look at the economy for the remainder of the year?
Yeah, and I mean, if I kind of put up my hat there as representative of the private sector and as a leader in the private sector, I think it's time that we start changing our investments towards innovation for good, and rather than innovation for most likely too much profit. And I think from an outlook perspective, that is what would create a difference. It is amazing around thinking about the lower carbon emissions that we've seen just by people working from home. And those are small things that we can do to grow this economy and make this world a better place. As Stanbic, of course, we have to deal with the pandemic as it arises, and we have done our own contribution to it by contributing about 192 ventilators. We have around 700 sanitation stations that we partnered with the Rotary Club to make sure that this reaches various counties in the country. But economically, we also do see women as a key catalyst of the rebound of this economy. And our data proposition kind of tries to handle the non-financial piece and the financial piece around helping our women rebound in this space. It's amazing how women are starting to now balance teaching their children at home while at the same time fending and looking for food for their children. And we want to play a unique part in enabling them grow. So we've done a lot of non-financial academies to help them know better how to manage their finances. We are now approaching about $1 billion in lending to specifically to women. Remember, we do have a kitty of about 20 billion that's still available for our women. On the non-financial part, we've helped them better understand the tax measures and how they can benefit from those tax measures. We've created exposure to them around expertise around health and hygiene, and helped them to understand what this pandemic is all about and how they can protect their businesses as well as their families.
I like that because I'm a woman and I run a business. How do I get access to this funding if I was interested and if I was eligible?
So all our funding available are now available digitally. And we also do have some of our relationship managers who are available to speak to any of the women interested in getting into a funding relationship with us. We've also now launched, and our foundation is quite active, and we are trying to source cheap funding from our development partners to enable our women access this funding. So speak to any of our branches, call us into any of our call lines, and we should be able to assist.
Okay. So this is an investment show, so I cannot leave you without asking you, Abraham, where are you investing now? Are you holding cash? Are you putting money in stocks? Are you putting in money markets? Without putting you on the spot and without engaging or infringing on your personal proprietary information.
I should probably send you an invoice after I tell you this. I think it's important to be diverse. I think at this time, because of the uncertainties, I've chosen to be a little bit more liquid, go more on short term and reinvest and reassess my needs as time goes. So giving government through treasury bills is quite important for us. For me, thinking about some of the short-term investments available in some of our insurance companies is also something I would consider. Okay. So I'm more short-term right now.
Okay, yeah. I will gladly accept that invoice. Thank you so much, Abraham, for your time. It's always a pleasure to speak to you. We certainly appreciate the time. And I think that is it from us, ladies and gentlemen. This was a very interesting conversation because this time we have a different scenario we are engaging with. We are talking about operating in an environment where there's COVID. What we've had is certainly there will be continued uncertainty, and COVID now moves from being a pandemic to being an endemic. It's something that will be with us. We have to adjust to a new normal. As a bank, Stanbic Bank continues to support women through its Dada Sphere product, having lent up to 1 billion shillings to this particular part of the segment. Over and above that, Stanbic Bank has been the first to offer a relief in terms of debt repayments, extending this to the SMEs as well as the industrial segment in Kenya. What does this mean for its operations? If you actually look at the numbers and scrap off the one-off numbers from last year, it does look like this year could possibly be flat or nearly flat compared to last year's performance. There are certainly risks that abound, and the management team will continue to assess these risks and look at what impact it means for you as a shareholder in as far as your dividends are concerned. Thank you for joining us once again. I hope to see you next time. And that's all from us at Markets Today. My name is Bitha Mwema. Thank you and good day.